Good morning. It's Friday. Thank you so much for joining me for Friday morning coffee. Last week we talked about your due diligence period and what that contingency period looks like in the home buying process. And today I'm going to talk a little bit about the financing contingency period. This is a very, very important period of time because this is when you are going to be getting all of your documents and everything to the lender for your final loan approval. The lender will also conduct an appraisal during this time, and the appraisal is an important part of this contingency, but it's also a separate contingency. So I'm going to talk a little bit about that next week. So very, very simply, a financing contingency is you telling the seller that this contract for you to buy this house is 100% contingent upon you being able to obtain a mortgage. So obviously that is a super important piece of any contract. And in order to understand just how important it is, I'm going to give you a little example in case you don't have a financing contingency on your contract and you do want to obtain a mortgage. So let's say you write a contract for a house and you don't put a financing contingency in it. For some reason, maybe you don't have an agent, maybe you don't know that you have to have that. But let's say you don't put a financing contingency in your contract, but you are planning on obtaining a mortgage. So you go under contract, you go through due diligence, you're doing your loan process, and then your loan gets denied. Well, what happens at that point? At that point, you either have to pay cash for the house, or you can terminate the contract and you will lose your earnest money because you have not made your contract contingent upon you obtaining a mortgage. So that's how important this contingency is. It's very, very important. Usually it lasts between 20 and 24 days, depending on the lender. Sometimes we can make it a little bit less. But it'll just depend on what the lender says is an appropriate timeline to get all the documents done and to get everything through underwriting. So there's a couple of things I want to point out and that it's very important to keep in mind during this time period. The first is, and we talk a lot about minding deadlines, but the first is really making sure that you get all of the documents that your lender needs in a very timely manner. So you're going to want to fill out your loan application if you haven't done that already. Send in all the documents, the bank statements, the W-2s, the tax returns, your homeowner's insurance policy, all of these things that your lender needs to submit your file to the underwriters for approval. Get it to them as quickly as you possibly can. It will make the rest of the process so much smoother. The other piece of advice that I have is once you've started this process, do not go to a furniture store and finance furniture to fill your new house while you're in this period. Do not take out any new credit. It will just make things more complicated and can really vastly change your numbers and what you actually may qualify for. So don't let there be any surprises 2 days before closing when they pull your credit again, or a day before closing before they pull your credit again. Just stay out of the stores. Don't get any additional financing on anything until after you close on your house. So those are my two pieces of advice for your financing contingency. Next week, we're going to talk a little bit about the appraisal contingency because in order to get that final loan approval, the lender will have to have an appraisal for whatever the sales price is on the contract. But the appraisal is kind of also, not only does it affect the financing contingency, but it's also a separate contingency as well that I feel like we need to talk about separately. So anyway, I hope you guys have a great week, and I will see you next week when we talk a little bit about the appraisal. Bye.